Welcome back, ladies and gentlemen of YouTube. Adam here with thehighestreturn.com, and today I have a special guest, somebody who actually started thehighestreturn.com with me back in 2013 and then abandoned it. But he's back, and we're here to talk about our different investment strategies and a little bit of what's going on in our investment lives. Welcome, Damien.
Hello. Hello, Adam. Hello, Internet. Thanks for that awesome introduction.
Yes. Well, while everybody's looking at our weird hair, it's the year of 2020 and everything's messed up this year. So,
Coronavirus, baby.
yeah, coronavirus.
Did you do your hair or did your 7-month-old do it?
I did it. Yeah.
Nice.
If I'm not doing my hair, it'll be like down to here and then just like out here. It's craziness.
Uh-huh.
So let's get into what our investment history is. And I guess it probably makes sense to share like where we are in our lives. I think we're both in our 30s, right?
Yeah. Mid-30s? Yep.
Mid 30s, and I'm like early to mid 30s, I guess. Almost, mid 30s. So let's talk about your investment history first, Damien.
Sure.
How you got started, like from the very beginning, off the top, were you a kid, or how old were you when you got started, and what did you do?
Yeah, I would consider myself a pretty late bloomer when it comes to investing. Growing up, my parents, if they did talk about investing, I don't remember it or wasn't around when they did. So
Mm-hmm.
it wasn't really till I met my wife when I was 22, and her family was more into personal finance and investing that I got into it, and they got me into it. So started out with personal finance books like Dave Ramsey. Her family's really into Dave Ramsey. So started out there, learned a bit about budgeting and personal finance and investing for retirement. So that's where I got started.
Okay.
And I probably opened my first investing account around 2009, I think it was. Opened up a Roth IRA for myself and one for my wife as well.
Okay. Were you working at the time, or just?
Yeah, I was in college, had a job at school, and had a summer internship. So did have some income coming in at that time.
Okay. Okay. Um, Interesting. I guess I'll just switch over to me for a second. So I got started when I was around 16 years old. My dad was trading stocks already, and he gave me this fantastic opportunity. He said, "If you do the research, you find a stock for me, we'll split the profit. So you'll be able to keep 10% of the profit, or you have to pay me 10% of the loss, and then I'll just front all the cash up front." And I picked some good winners. If I remember correctly, the stock symbol I picked was AH, EW, and ED. So AH was Armor Holdings at the time. Um, I want to say it's probably gone up by 100 times since that time because it basically got bought out by another company. And I made $500 on that. So my dad made 5,000. I made 500. He was able to buy a TV, and then I was able to keep that for myself. I didn't really spend all that much money when I was a kid. But that's how I got started. And the literally the first way that I got started looking at stocks was randomly typing two letters into, I think it was Yahoo Finance,
Yeah.
and saying, does this look like a cool company or not? Nah, Armor Holdings. That's pretty cool.
Yeah.
But I actually wish that he had held the Armor Holdings because shortly afterwards, we got involved in all sorts of foreign wars and things like that, and it really just zoomed up.
So let me see if I get this straight. You're 16 years old. Your dad approaches you with this investing deal where you got to keep some of the profit or you have to pay him some of the loss.
Mm-hmm.
You're like, yeah, I can do that. So you go to Yahoo Finance and type in two characters and look for the ones that sound cool,
Yep.
and then started picking stocks.
And I was lucky because all the ones I picked were good. Um,
Yeah.
So,
Nice.
so my dad. So you can see it runs in the family, right? Like this thing. My dad offered the same opportunity to my two younger brothers, but that didn't do so well. I think one of my brothers chose Egghead, which is gone, and then
Oh.
yeah, the other one. I think the other one did MCI WorldCom. So two
Mm-hmm.
probably the worst possible symbols to pick.
Ouch.
Yep. So that is how I got started. But in terms of me, like using my own money, of course, 18 is when I have access to my brokerage account, and started trading ever since, I guess. But we'll go into details later.
Sure, sure. We can go into details later, but I just want to confirm that your stock picking criteria has evolved from typing in two characters and picking cool names.
Yes, it's evolved, but I try to stick with cool companies.
Yeah. Okay.
Yep.
I like that.
Mm-hmm.
So, my first foray really into investing, I had, like I said, I'd been listening to Dave Ramsey and reading his books. He mostly talks about reducing debt and getting your spending under control. He doesn't have a lot of good advice on investing. He
Yeah.
just says pick good growth stocks, which is a pretty general term. So I started looking other places for advice, and
Mm-hmm.
I started reading Jack Bogle's stuff. So Jack Bogle was the founder of Vanguard, who's like now one of the biggest investment houses that there are.
Mm-hmm.
And so I started getting into that philosophy, which was pretty much passive index investing,
Mm-hmm.
buying passive or buying index funds that are broad based and holding on to them for the long term. So, not much buying and selling, pretty boring.
Yeah.
And that's really what I've stuck with so far.
So
Just,
I would say that in terms of boringness, you can still be boring and buy stocks. You just have to buy boring companies,
yeah.
like Walmart, Procter and Gamble. Um, I mean, these companies pay steady dividends, and there's not much excitement there, but you know what you're getting into. The problem I
Yeah.
have with index funds and just buying the market broadly, the entire market, is you buy losers along with your winners, and you may buy into some companies you don't necessarily agree with, like ethically either. So,
Mhm.
like Philip Morris, for example, or like Las Vegas Sands, some people aren't really into those types of businesses and would want to stay
Mhm.
clear of those types of investments. But I understand where you're coming from, and I think for the majority of investors, I think that's probably the right approach because if you've ever been on any Facebook groups related to stocks, and basically they throw out these crazy names like Peruvian gold mining exploratory companies or Greek shipping companies that just randomly are went from $1 million per share to like 25 cents per share, and people are still talking about it. Oh, it'll go back. That's never going to happen. So if you know, depending on your level of sanity when it comes to buying stocks, maybe you should just stick with index funds.
Mhm. Yeah, I totally get what you're saying. There's some of the drawbacks with it. And I think what I mean by boring is that it's really a set it and forget it type of investing.
Okay.
So it's like I don't want to take the time to try to beat the market, so I'll just be the market, join the market. So I think with that being said, that's been my investing philosophy up until now,
Mm-hmm.
and it's been okay,
Yeah.
but I'm bored with it. And I think I could do better. And I think I'd like to learn more from you about alternative investing strategies to be more exciting or to get more involved.
Yeah. It never hurts to learn more about other people's strategies, and you choose what you want to do in the end. But I'd love to help with that. Yeah.
Cool, man.
So I guess I got a question. During this recent downturn that we've seen, especially in March and early April, what happened to your index funds? How did those do?
Oh, really? You want to rub that in
No, I'm
since
just
you were
wondering.
Yeah. Well, let's see. Well, it would be really easy for me to explain what I'm invested in since it's so simple.
Okay.
So, 90-10 split. So 90% in stocks, 10% in bonds.
Okay.
That 90% in stocks is invested in VTSAX, which is the Vanguard Total Stock Market Fund. So it's an index fund that's the whole market. And then my bonds are invested in, I don't remember the exact split, but it's split between the Vanguard Total Domestic Index
Mm-hmm.
Bond Fund. Yep. So domestic index bond fund, and then an international index bond fund.
Okay.
So that's my whole portfolio. Pretty boring, pretty simple. Total stock market, total domestic bond, and total international bonds. So, anyways,
Okay.
with all that said, I haven't looked it up exactly. I could look it up and get back to you, but somewhere under 30%, I think, maybe 28% drop.
28% drop. Okay.
I think, yeah, I
Yeah,
think
I'm
somewhere.
looking at it right on my screen here. And I see that it was trading at like 83.50 on February 20th, and then right now it's 71.79. So it went down quite a bit. It went all the way down to 54. But right now it's trading at 71.79.
Yeah,
So
it's coming back.
it's coming back. I think you're down over 10%, like maybe 15% or something right now.
So
Um,
if you look at VTI,
mm-hmm.
which is the Vanguard Total Stock Market ETF,
Okay.
which is pretty similar to the VTSAX.
Yeah. Just do this over the phone real quick so we can see the percentage loss. 12% over the past 3 months. Is that what it says? 12.4.
Yeah,
Yeah.
so it's right now it's at, yep, 12% down over the past 3 months.
Okay. Um, so I'm just gonna go over like what happened with my portfolio and kind of explain why I'm up in the past 3 months. I'm up 16.3% in the past 3 months, um, and really, it has to do with adapting yourself to changing situations. When you buy an index fund, you have no way of like splitting out companies you know will be affected by something like COVID-19 versus things that
Yeah.
would actually benefit.
True.
Um, so I've actually did some old school stuff here. Um, just have a list of a few things that, a few crucial changes that I made when things started happening. So we knew about this thing. I want to say probably since January. I mean, we've heard the news coming out of China. Um,
Yeah.
I know for sure that I knew about it in February or late February. And then the big shock to me was when the stock market went down 3% in one day. And this that sounds like nothing now, but um, there was a day I think in February where it went down 3%, and I'm like, wow, that's pretty. This something's changing here. And so
Mhm.
what I did was I sold my basically run of the mill stocks that I had, um, and then I was investing in water companies and things like energy related companies and stuff like that. But I ended up selling those, and then I put money into buying put options for Texas Roadhouse. Are you familiar with the put option?
I've heard of it. I've never done one and don't know how it works.
So a put option, in the American stock market, you can buy stocks to go up. You can also short stocks to go down.
Mhm.
A put option is a good compromise between not actually shorting stocks, but still betting that something will go down. So if you short stocks, you have unlimited loss potential because if it could go up, you know, forever and you just lose unlimited amounts of money. When you buy a
Yeah.
put option, you're saying, I think this stock by this time in the future will go below this price.
Mhm.
So I bought a put option for Texas Roadhouse with the strike price of $45 per share, expiring March 17th. Or sorry, April 17th. And I bought that on March 13th. So, and this was the time where the news just kind of just evolved quickly between March 13th and March 17th, and the stars just started free falling. Um,
Mhm.
and so just a few days later, on March 17th, I was able to over double my money on just that put option.
A
So,
put on Texas Roadhouse.
yeah. Mm-hmm.
The restaurant, right?
That's right. It makes sense, right? Like, just common sense. Like, you don't have to be a stock market genius to know that, like, disease and restaurants, like, people congregating is not a good mix. So that was my thought process. Like, just use, admittedly, you have to sort of use your brain, and you can't just, like, put money into an index fund and just, it won't be magic. You won't make magic returns. And sometimes I'm wrong when I make these judgments. But I did that, and I also bought.
That wasn't familiar to me.
Sorry?
You used a word there that wasn't familiar to me. You said the strike price.
Okay, the strike price is the price. Okay, so if I bought the put option for a strike price of $45 on April 17th. So that means if the price goes below $45 by April 17th, then I start to make money back from my put option. Okay. So, like, let's just say it went down to $35 per share, Texas Roadhouse, by April 17th. Then I'd make $10 per share for my option. I have some other videos about options. Okay. I also bought Moderna. And Moderna is...
Hello.
Hey, we're gonna...
This is you!
Yeah, this is me. Hey. We're gonna have to cut this out of the video. Eddie, go back. Here, I'm gonna... That's okay, this is not live, so... I have to continue my video. Alright. So...
Doing the blooper reel.
Yeah. Or I could just leave it in. I guess it doesn't really matter. I'm still wearing pants, so... Alright, so I bought Moderna, and Moderna, was rumored to have been working on this vaccine very early in the news cycle. And I bought that at $20 per share. Moderna right now is trading for $59.25 per share. So, more than double my money on that one as well. I made a mistake too. I bought Delta because Delta was hit big, but Delta has continued to go down. So it's not all wins, but when you take everything together, the positives outweigh the negatives in my situation. I sold Kroger because it's just been a stable stock, and I need more ammo to make a higher return. So when you have every single company go down, but Kroger doesn't go down and it goes up, then, for me, at this point in my life, I'm taking a little bit more risks to make a higher return. I put a lot of money into Bitcoin and also gold ETFs. So the gold ETF is not based on companies, it's based on actual physical gold. So it has vaults of gold. It keeps a certain amount of gold every year as commission, but basically you can invest in gold without actually having gold. So.
All right.
Yeah.
So kind of 3 different strategies that you use. So put options, cryptocurrencies, and precious metals.
Yep. And I actually did buy a call option for Moderna as well. So.
Okay.
There's a lot of different things. There's too many to really mention. I mean, I bought a call option for Moderna. I bought Ruth Chris stock when it was really low. Doubled my money on that one. I've already sold that again. But it's active investing, but I don't think you can get the highest return investing in index funds. That's not what Warren Buffett did. I don't think it'd be impossible. That means everybody wins, right? That's like everybody. So are you familiar with roulette by any chance?
Yeah. Mm-hmm.
So I guess I could view it as you're betting on red every time, potentially, but I'm only betting on some of the reds. Mm-hmm. It's not exactly like that, but the payout is more if I don't put it on some of the reds that I know aren't going to be hit, or I think aren't going to be hit.
Yep. Totally makes sense. The difference between the mediocre return and the highest return.
That's right.
Cool. Well, I'm ready to learn.
Yeah. So let's talk about the tools we'll use first. What tools do you use to invest, and how do you like them?
Yeah. So, like I said, I'm the boring investor. So, my tools are also pretty boring. So, I invest in I have a 401k, and that's just directly pulled out of my paycheck every year, every
I would like
month.
to interrupt you real quick. The 401k. So with 401ks, or at least most companies 401ks, they don't let you roll over your 401k into an IRA while you're still with the company. You have
Mhm.
a limited choice of a few funds that you can invest in, and you have no say in what type of stocks they hold.
Yep.
So if you already have a 401k, and I do too, um, you already have that sense of like stability. Like there's your index fund. Like why do you want to go index funds for your private investments? You know, when you already have index funds in your retirement account.
Hmm. Yeah. So, I've just been really boring up until now. So, I've got the 401ks in sort of a target date index fund.
Mm-hmm.
Then I've got an IRA for me and an IRA for my wife, and those are also in index funds. So lots of boring passive investing all around.
Mm-hmm.
As far as the platforms that I use, our IRAs are with Vanguard because I like how low the fees are. Super low, rock bottom fees. It's a great company that's employee owned.
Okay.
And so the technology that I use is just their app and their website. A couple months ago, I downloaded the Robinhood app because I want to get a little more exciting with my taxable investing.
Okay.
So I have, but all I've done is buy stocks through there.
Mm-hmm.
I haven't tried any other sorts of investing. So that's really about it. When it comes to personal finance and budgeting, there's software that's called You Need a Budget that I've been using for several years, and I like that a lot.
Some people call it YNAB.
YNAB. Yep, that's
Yeah.
right.
Yeah.
What about what tools do you use?
I have YNAB too because it was on Steam. I think it was on sale on Steam, but I didn't keep track of it that much. And my family generally doesn't splurge. Like we don't really buy expensive stuff. We typically just stick with the necessities. And how I track my expenses is through my credit card. I try to basically buy everything with one credit card so I can track it all. Um,
Hmm.
and I think the areas that I've known are the problems for spending are basically restaurants and coffee. Like if you can cut those out or save on them, then you can. At least for me, I can save a lot of money if I stop or I scale down how many times I go out to restaurants. Because here in the
Hmm.
United States, eating out is expensive. I was in Malaysia where it would cost $2.50 to buy a meal, and in that case,
Right.
it's actually cheaper to go out to eat than to prepare it yourself. But
Right.
here, it's more like $10, and then you also have to pay for a tip, um, and then you
Hmm.
want to tip like 15%, so or more. So it adds up for sure. Um, the others. What about you? Where are your expenses? Where do you find that you can cut out your expenses?
Yeah, it's pretty similar to you. It's mostly food. So we do track our spending every month and keep a pretty close eye on it.
Mm-hmm.
And it's really food,
Yeah.
eating out, groceries, that kind of stuff. Um, However, I did notice a lot of spending that I was doing last year on Apple products. I'm a pretty big Apple fan, so
Yeah.
I've got MacBook, iPad, iPhone, etc. So I
Mm-hmm.
made a New Year's resolution at the beginning of this year to not buy any more Apple products
Yeah.
and also to not buy any clothes this year. So I'm hoping those two areas will
Yeah.
help reduce spending this year.
Yeah. I agree with you there. I try to. I mean, I guess for me, I buy a new phone every 4 years, about 3 or 4 years.
Mhm.
So I don't really. I'm also like I only go for Apple right now because I'm in the ecosystem. I've already bought so many apps and things like that. But Okay, that's good to know. So you use Robinhood for your active investing,
Yep.
and then, we won't talk about what your 401ks and stuff like that because that doesn't really matter. I think really what matters, the technology in the context of what we're talking about is how do you track your how do you invest? What kind of research tools do you have to invest, and not only for stocks but eventually for real estate as well,
Hmm.
because real estate I think is an important part of anybody who's an investor. I think should consider investing in real estate because the way the tax laws are written makes it very favorable to invest in real estate and pay less taxes. And then for the long term, you're getting a lot of leverage for your investments, which is really useful. I don't think leverage for stock. I don't borrow on the margin for stocks, so I pick the stocks, but I don't actually borrow money to buy stocks. But I do borrow money to buy investment properties, um, because investment properties are managed solely by myself. I choose how I manage it or who I hire to manage it. I can see it. It's a tangible asset. Um, my property can't issue more shares and dilute the value of itself. Um,
Yeah.
and then my corporate, I don't have corporate officers that pay themselves way too much. Um, so, um,
Yeah.
but anyways, sorry. My tool that I use for research is Charles Schwab. I think they have the best user interface when you're using the computer to invest. They have charts where you can look at profit loss estimates if you're buying options. And I've used it for years. I've used it since I was 18, so I'm really used to using it. Robinhood's okay for if you're investing on your phone, and it's also good for investing in Bitcoin or cryptocurrencies. Um, and it's not too bad for looking at options as well. But I do prefer the Charles Schwab UI. Um,
Mhm.
yeah, and you also get a discount if you use Rocket Mortgage and you're a Charles Schwab customer. Depending on your net worth in Charles Schwab, you could get a discount on your interest rates. So I've done that too. Hmm.
Nice.
Yep.
Hey, have you heard of Morningstar?
It's a rating, Morningstar ratings, or is it a
Yeah,
software?
they're a stock research and rating company.
Yeah, I've
And
heard of them.
I recently found out that they've got like a premium subscription, and my library has free access to the premium subscription. So I was thinking about checking that out.
That
They
sounds
make
good.
stock recommendations.
Is it like subscriptions to like magazines or something, or is it a digital subscription or?
It's a monthly subscription to an area of their website that has deeper research and analysis on stocks.
Yeah, that's fair. Um, well, I'm gonna just tell you what I do for my research, how I research stocks,
Yeah.
and basically what I do is, and it didn't used to be like this, but now basically I stick with companies that I actually know about. Um, if I must have heard of them, I've seen them like physically, um, except for something like Moderni where there's been news about it and it's been vetted as a real company.
Mhm.
I look at their statements, the financial statements, and it I sort of judge based on their PE ratio. If they have a low PE ratio and they're growing, that's like the optimal situation. I try to find companies that are cheaper, that are growing, and even better if they're paying dividends. Um, that's for one area. That's like the stable, like the bulk of my stocks are these
Mhm.
type of dividend paying, solid companies, kind of like Walmart and Procter and Gamble and Kroger, those types of companies.
Yep.
I also go for companies that I know about from the products that they create. And then I know what kind of economic moat they have, which means like how hard is it for other people to just take over their whole business.
Mm.
Um, so as a gamer, I'm familiar with Fortnite. I don't play it, but I'm also familiar with League of Legends, and that kind of got me into researching who owns this company, who owns Riot Games, and
Mhm.
Tencent, which is actually a Chinese company, owns majority stake of Riot Games. So I invested in Tencent, and they've just continued to go up. They also own something called it's like WeChat, which is I know a lot of people in China, and that's basically all they use is WeChat. So it's like the Facebook slash WhatsApp for China. So
Mhm.
I know about the company. I know their products. I know they're not going to disappear overnight, and so I put some money in that company.
Are
Um,
those companies that are listed on the New York Stock Exchange? I guess my question is it just something that is easy access to for United States citizens to invest in?
this one trades over the counter, but it is easy to access. You can just buy it from Charles Schwab. It's fine. There are
Yeah.
some foreign companies you have to call them to place orders for. Um, for example, AirAsia in Malaysia. It's a
Mhm.
smaller market. I don't really know off the top of my head what allows you to buy it versus doesn't allow you to buy it, but I know I was able to buy this one.
Mhm.
The other investments I made into the video game industry were EA Games, Take Two Interactive, and Zynga, and Activision Blizzard. So pretty much all of them. Um, and I only increased my stake when things started getting rough because people are still going to play video games through the outbreak. So it's just kind of common sense type of stuff, I guess. And it seemed to work out pretty well. So if it
Nice.
works, then I feel like it's something to do. It's not, I don't look at Morningstar um, to make my decisions, and I don't look at Charles Schwab's rating either, because I think what Charles Schwab, their like score system, they have an A, B, C, D, whatever, is based on their cash flow and stuff like that, and how much cash they have on hand. But that doesn't determine whether a company is going to be growing or not. Like their product is going to drive whether the company grows or not. So
Mhm.
um, I really am product focused, I guess, um, when I come to my investment decisions.
Nice.
Yeah. Okay. So I think the next question we should talk about is um, if we all have a little extra money at the end of every month, where should we put that? What do
Okay.
you do with the extra money you have at the end of every month?
So, being the boring investor that I am, trying to not be anymore, but being a boring investor, I would just buy VTSAX. So, I would buy the Vanguard Total Stock Market Index Fund. But I would like to learn from you some strategies of what I could do with that money to be more exciting, to maybe make more than just matching what the total stock market's going to do.
Okay. So what I've been doing is I have 500 that goes every month to my Ally Savings account, and that's what I use for my down payments on investment properties.
Mhm.
So I'm trying to build up an investment property portfolio, so I need to stick with that goal. So that just makes it so I don't touch it and put it in the stock market. Um, Once in a while, I'll move like a few thousand over to Robinhood or Charles Schwab, and with Robinhood, I'll usually put some in Bitcoin, and I'll also play with call options and stocks just based on the current affairs of the world. Um, the reason why I think Bitcoin is not dead, and I think it will remain relevant and potentially be a good store of value, is because the U.S. is creating a lot of fiat currency um, to buy bonds and buy corporate junk bonds and put money into the stock market and you know give stimulus money out. Um, the U.S. dollar is I don't think the US dollar is going to be worth the same it is tomorrow as it is today. It's just going to keep going down. And Bitcoin, the way the algorithm works is there's a limited number of Bitcoins that can ever be mined, and people place value on it, which is the most important thing. People placing value and trust into it. Um,
Yep.
and it's actually going through this halving this month, which means it's going to be even harder to mine more. Um, and there's a way it can be used as a payment method. So I can pay you for using Bitcoin, and then you can give me a service. You could also invest in gold. I invest in gold too. I have more money in gold than I have in Bitcoin.
Yeah.
Like gold is like the oldest currency in the book. It also has a finite amount on Earth.
Hey,
Yeah,
on the top of Bitcoin,
yeah.
is that the only cryptocurrency that you invest in, or are you looking at any other ones too?
I have some money in Ethereum too.
Yeah.
Yeah, Dogecoin I think is it's just like this little cheap scammy coin. I don't know, but I mean I just put it in Bitcoin and Ethereum.
Mm-hmm.
I mean I could probably be persuaded to put it into more types of coins, but there could be a million new types of coins created, and so with every new type of coin created, I think it dilutes everything that isn't Bitcoin because Bitcoin is like the gold standard of cryptocurrency. So that's why I think Bitcoin is the best cryptocurrency to invest in. It was at 20. I think it was probably like $20,000 a few years ago. So yeah, I feel bad for people investing into that, but I've invested in it a long time ago, like $600 per Bitcoin. Um, I wish I bought more, and it's just I probably keep a little bit in Bitcoin. It's not the main thing, but it's not insignificant either. It's just another store of value. Like get away. It's a way to get away from the U.S. dollar.
Yeah.
Yep.
So let's say next month I have 200 bucks.
Mm-hmm.
Should I save for a down payment for a rental home? Should I put it in Bitcoin? Should I
You
invest
have
in stock?
$200 per month. You said.
Mm-hmm.
Well, in my mind, Bitcoin is better than cash. So I would either put it in Bitcoin or I would put it into the Ally checking account because Ally
Mm-hmm.
gives the best interest rate right now. I think it's 1.3%.
Yep.
But like what I'm doing for my investment properties is I'm putting in the Ally checking account. That's what I'm doing personally.
Mm-hmm.
As for the Bitcoin, I had all this money in Robinhood and I don't want to transfer it out of Robinhood. But when I sell stocks that I think aren't going to do so well, I just put it in Bitcoin until I find out what other stock to buy.
Yeah.
Because I think the rate of return on Bitcoin is going to be higher than 1.3% per year.
Nice.
Yeah. But it's really up to you. I mean, do you know when you're planning on buying the next investment property? Do you have a goal on a date?
My goal at the beginning of this year was this year. Now I don't know if that needs to be adjusted due to COVID-19.
So what I would recommend is wait until this winter, or maybe even January. It's the worst time to sell a house, and people are usually giving the best discounts
Mm-hmm.
because, especially in colder regions where they have to pay to keep the heat on and stuff like that, and nobody's moving. In like, for example, New England, you're in. Are you in a cold, temperate area? Like during the winter, does it snow and stuff?
As it snows, it gets very cold.
Yeah.
Yep.
If if you're looking for an investment property, that's what I would wait for. I would wait for later in the year. It's kind of like a give and take though, because there's less inventory. Because typically people take their houses off the market as winter approaches. But
Mm-hmm.
if you're lucky, and if you're in a place with a lot of houses to choose from, the winter might be the best time to get into a property. That's what I did in when I was in New Hampshire. So, and I bought that for 267,000. I sold it for 307,000 within less than 12 months, so less than a year. So
Nice.
it's I think timing is important, and also, but you'll need to be prepared that the virus may come back this winter. Hopefully,
Mm-hmm.
there's like a good treatment and stuff, and so that would be another reason why prices would be lower. But it may not be the best time to buy an investment property, depending on where you are, depending on the unemployment rate, depending on like how many people get reemployed after this whole thing is said and done. Like, if you're in Los Angeles, I wouldn't suggest buying an investment property right now.
Yeah.
You'd have to
Yeah. I
look at
think I
yeah,
think I'm gonna wait and see
yeah.
right now.
That might be a good idea. And in for the wait and see attitude, maybe maybe Bitcoin would be the thing to invest in. Gold or Bitcoin.
Yeah.
Yeah.
Okay. So Adam, can I tell you about my biggest real estate investing mistake?
Yeah.
So I don't even own any rental properties yet, but I've already made a mistake with rental income properties.
Okay.
So last year I decided that I want to start investing in rental properties. So I started saving up for a down payment. Now, the safe and prudent thing to do, like you had mentioned previously, is to stick that money just into a checking or a savings account
Mm-hmm.
since I'm going to be accessing it within a year.
Yep.
So I've got a short time frame. I shouldn't be that risky with my money.
Mm-hmm.
But I saw that the stock market was doing awesome. It just kept going up and up and up.
Yep.
So every month I get that money and I throw it right into my VTSAX, Total Vanguard Total Stock Market Index Fund.
Yeah.
And I watch it go up and up and up. And then February, March of this year hit.
Yeah.
And I lost about 30%. And I'm still down about 15%. So
Yeah.
I'm still waiting for that to recover.
And my guess is you're going to keep it all in there right now.
Yeah, for now. I don't want to, solidify my paper losses and turn them into real losses. So
Mm-hmm.
I'm trying to just ride it out, wait for it to come back.
Yeah. It's called sunk cost. I mean, that's another thing about like actively choosing the companies and trading them is I was able to double my money on a lot of companies and sell them out, and then sell companies. Like right now, I'm trying to cash out a bit actually, because it makes zero sense to me that the stock market would recover to exactly the level that it was before this whole thing happened,
Mhm.
because nothing about this made anybody stronger. Like, I don't believe that everybody who got laid off was completely useless. I don't believe that.
Mhm.
The only thing that's changed is now there's more US dollars in circulation.
Mhm.
Like, there's more US dollar circulation, there's more unemployed, and then people's mentalities, I think, have changed. Like, I don't think people are going to be as keen to do what they used to do before. Some people will be more keen. Like, they'll be like, okay, I'm going to do this even more because I've missed out on this thing. But other
Mhm.
people will be a little bit more careful, I think. Like, they may not travel as much on airplanes. They may not go overseas as much. You know, they may choose to take road trips and camping and stuff like that with their family rather than stay in a hotel with thousands of other people, like on a beach somewhere. That's just my thought.
So
So
you see some long-term behavioral shifts due to
yes,
the
I
lockdown.
think that will happen. I think that will happen. That's
Yeah.
just like, see, that's me versus you, right? I'm just thinking that something's gonna happen, and I invest based on what I think's gonna happen. Like, I don't I don't let I don't invest in the market as a whole. Like, that's just the difference, I guess.
So do you think I should cash out now and lock in my losses?
For your Vanguard,
Yep. For my investment property down payment fund.
so I don't think when you say losses, do you have the option of choosing first in, first out, or last in, first out when you go for
Yep.
your?
Yep, I
Okay,
can.
so if you did last in, first out, then you would have taxable losses, right?
hmm
And they would be short-term taxable losses,
I think actually some of them are old enough that they would be long term.
depending on how much you sell.
Yeah, exactly.
Because you put
Yep,
in 500 a
I'd
pop.
have to go ahead.
Because you put in $500 at a time, right? So you'd have,
It depended on the month. Some months was more, some was less.
yeah. Well, that's a difficult situation, right? Like, that's a difficult quandary, because
Yep.
you're asking me whether you should take losses, and we don't know what's going to happen. Like, I don't know. I can only speculate. Um,
hmm
for me, I wouldn't have gotten in there at the first place, I guess. But okay, I'll give you an example of a loss I took. I did have an ETF, actually. I did have an ETF. It was ITA. It was U.S. Aerospace and Defense ETF, and that one just has all of these U.S. aerospace companies and defense companies together. So I did actually do some index fund, but it was focused. It was focused on the sector, and
Yeah.
I really believed in the whole sector. But when this whole thing happened, I actually sold that because of Boeing. I sold that, and then from their prospectus, you can see all the companies they invested in.
Mhm.
So I sold that because I didn't want to be exposed. Their top holding was Boeing. I sold it, and then I bought Raytheon Technologies, which was one of the companies that they had that was in their list. So in
Mhm.
that way, I lessened my exposure to that company, but I still put the money back in. So when the upside does happen, I'll still be part of that. So, with yours, you could sell it for your loss, right? You could sell it last in, first out, and then you could buy another company that you believe in more strongly, like
Mhm.
Facebook, for example. I also have Facebook stocks. I don't think
Mhm.
Facebook has been doing just fine through this whole thing. And with the election coming up, they're going to make more ad revenue. And I even buy some ads from Facebook myself for my page. And I know like how easy it is to spend money on that thing. So I believe in their product, and I believe that Facebook is slightly addicting. Um, it's a legal addiction. So
Yeah.
but I think it's an ethical like it's an ethical addiction because you're addicted to seeing photos of your family and getting communicating with your family because you can't do that now, you can't go out. So how do you do it?
Mhm.
You do it through Facebook. So
Mhm.
like what you could do is sell it and then buy Facebook.
Cool. All right.
Yeah.
So I was being a little dramatic when I talked about losses. So that's my losses from all the growth. The good news
Right.
is I look at my cost basis, so how much I actually put into the fund,
Yep.
and I'm still in the green. Like
Yeah.
I've made a little more money. I haven't actually lost any from what I invested, but still it hurts to see that it's down from where it had been just
Yeah.
a couple months ago.
So how much are you up then for the year? Like if you say
It
past year.
Let's see. So if I look at my cost basis inside the Vanguard app, I am up $1,600.
How much percent is that?
Yeah, then I have to do math.
Oh, yeah. I I mean,
Yep, let me do it.
that's fair. I'm up 30% for the year. Um and I I guess I mean betting on stocks is like a winning proposition in the long term, like regardless. The question is whether or not you want to split them out. Um and pick out your own stocks or just buy everything all at once. It's
I am up 3.5%.
3.5% versus my 30. So, but it's just a one-time thing. Like you
You got to
don't,
rub that in, huh?
huh?
I said you
Oh
got to rub that in, right?
no, I don't. But I have to get views somehow. So it's been really nice talking to you, Damien. For people that don't know us, like we've sort of been like we worked together many years ago, and our lives have changed, very dramatically over then, you know. Um, but it was nice catching up with you, and I'd love to talk to you more about just investing ideas and just to get the different perspectives between somebody who's followed, the straight and narrow path, which is you, and
Yeah.
and somebody who's kind of gone into the wilderness and maybe like found a piece of gold, but maybe got stung by some bees and maybe got bit by a snake here or there. Um,
Uh-huh.
so,
But
um,
one of those killer wasps.
yeah, killer wasps. I'm interested to try one of them one of these days. Supposedly they taste pretty good. So,
Oh,
but
sounds
maybe I
delicious.
shouldn't be eating exotic foods at this time. You never know what's gonna happen.
Well,
Um,
Adam, thanks for having me.
yeah,
I
no
had a good
problem. I appreciate you joining the channel and hope to see more from you in the future.
All right.
All right, see ya.
Goodbye, you too.